Hey traders and investors, it's Serge Berger here. Before looking at the oil market and how that's really weighing on equities here, I wanted to wish everyone a very happy 2016, a very happy, healthy, prosperous one to both you and your families. And as we get started here for the first week of trading in this year, I do want to also remind you guys that the first week of trading, the first few days at least of a new year, are not where you want to press any bets. You want to see kind of how the market shakes out. Let it sort of get in a bit of a motion. A lot of big institutional traders and investors are basically sort of making up their minds here. They're not necessarily going to make any big trades, so we tend to be fairly choppy for the first bit of the January month. Now, let's take a bit of a step back, and I think this continues to be a very important point to make as we roll here into the early part of a new year, and that's oil. And you've got here a chart in red. I plotted the USO, which represents basically the price of oil through an ETF, and of course in blue we have our familiar S&P 500 benchmark equity index. And it doesn't take a genius to see, but basically, ever since oil started its really nasty decline in the middle part of 2014, it's been a one-way train, and one that at least in price in terms of price, so in price terms, which of course is the only arbiter, is not yet making any turn for the better. There are plenty of signs from indicators such as momentum and fear indices and even volatility like in options premium and things like that, that the oil market should start to see a bit of a bounce here. We're just not quite there yet, and as such this is also certainly weighing on equities. Now I am in the camp that in 2016 we have a decent chance of seeing a 20 to 30% correction in the S&P 500 at some point, and I will share that with you guys in my 2016 market outlook, which should be available probably in about a week's time or so about the middle of the second week of January. And so that's as far as equity goes. But I think in the near term, if and when equities actually maybe see one more bounce here into the first part of 2016, which I also believe in, that's only going to happen if oil can get a bit of a better foundation. So this is the relationship, and this relationship, by the way, has a strong tendency of of not mean reverting. So you can see, at least from 2009 lows, that this sort of hungry crocodile, if you will, has not yet mean reverted. Ultimately, this stuff does tend to mean revert, as you can see if we go back a little bit further. But right now we're at very historic wides that I do think ultimately will mean revert, but it hasn't mean reverted really over the past a number of years. So that's, I think, a crucial chart to keep in mind. If we then sort of take a look at something like the OIH, which is an ETF that's representing some of the oil services stocks. Here too, you can see a very simple one-way train. It's just really nasty. There's nothing really here that's giving us any real price reason to buy this. From a price perspective, again, if we were to look at oscillators and all sorts of technical things, we could say yes, there's support and all those things are lining up. The problem is price is not yet actually confirming this. We had a bit of a bounce here in the latter part of December that ended up fading out. So again, unless we see a more sustainable bid in the oil space and oil related stocks, I do think it's going to be very difficult for stocks to have that one more further bounce that I do think we stand a good chance of having at some point over the next few months before we then see the chance of a bigger draw down in the US equity markets. Please, guys, subscribe to my channel. Please like the video. That's how I move up in the YouTube ranks. And again, wish you guys all a great start to the new year, and I'll see you in the next video.